Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. To state the very obvious, the treasury of the government of India today is empty, and it has not happened overnight. It has been because of a few years of poor finances of the government. It is now the third consecutive year that our income tax collections have fallen below the target. For the third year in the running, in the current financial year now, tax collections are falling short of target, and this year they are falling short by a massive amount. This is so in respect of corporate income tax as well as non-corporate taxes. And while tax collections have been falling, on the other hand, the government has been truly unable to prune its expenditure. Normally speaking, if your income falls, you are expected to reduce your expenditure, but there's a limit to which the government can do that. And because of this phenomena of falling income, falling receipts, and almost stagnant expenditure, the treasury today stands empty. In the current financial year, like in the earlier years, the government has been living beyond its means. It has been living on borrowed money. In the current financial year, the government's borrowings are to the tune of 12 lakh crores. That's the kind of excess of expenditure over revenue receipts that the government is visualizing this year, and hence this kind of borrowing. Because of this kind of borrowing, the public debt of India is now touching 90% of GDP, which is a sizable amount. The irony is that at a time when the government needs to desperately spend and invest in order to prime a sick economy, in order to ensure that businesses are revived, businesses do recover, at such a time when the government needs to desperately spend, its treasury has been empty. The question that arises is that there seems to be a limit to which the government is willing to borrow, raise funds from the domestic markets. And then, because of the COVID pressure, because of the crisis of COVID, healthcare costs have gone up. And because of the skirmishes with China, defense costs have gone up. At such a time, when the government is not willing to borrow beyond a point from domestic or overseas markets, the question is, will the government in the coming budget raise taxes? Will the government seek to raise additional funds by way of raising taxes, in addition to the fact that we already pay record fuel prices towards petrol and diesel because of giant auto fuel taxes which have been levied by the government on us? Looking to this situation, it looks likely that the government might impose a COVID and a defense cess in this budget. But the question is, will the rate of income tax go up beyond this, or will other taxes which were levied in the past like wealth tax and estate duty come back in order to help the government to raise taxes? And we are talking this particularly with reference to the individuals, the household, the informal and the middle class taxpayers. Are they going to be subjected to higher tax recoveries by the government, either by way of rate increases or by way of wealth tax or by way of estate duty? The fact of the matter is that if the government is today sitting on an empty treasury, it's because taxpayers themselves are sitting on their own personal depleted treasuries. There has been a loss of livelihood, there has been joblessness, household incomes, individual incomes, income of the middle class, income of the MSME sector, they have all depleted. And when that happens, of course, it reflects on the government treasury. After all, whether you earn money by way of income or whether you spend money, you are going to pay taxes. If you spend, you pay GST. If you earn, you pay income tax. In either case, whether an individual earns money or spends money, the government gets its own revenue. The question is that if the individual does not have income and so he doesn't spend, how does the government get its own revenue, its own receipts? And that reflects on an empty treasury today. With the taxpayer's income having been uncertain or depleted on account of joblessness or on account of eroded livelihood, the fact is that the consumer is unwilling to spend. The consumer does not have the income, and that is particularly so when you see the pathetic financial situation of the middle class, the small businessmen, the MSME sector and the informal sector. If you look at this perspective, then to us, there is truly no scope for the government to increase tax rates or to put on new levies like wealth tax and estate duty in the forthcoming budget. But then look at the other side. The tax GDP ratio of the Indian economy, which stands normally between 5 to 6%, and which the government is very keen to increase somehow, today has fallen to 3.7% in this financial year. Of course, that's because of the COVID crisis, but the fact of the matter is that the tax GDP ratio has fallen considerably, and that would generally justify the levy of new taxes. But as we said, it's a time when the taxpayer himself faces a depleted treasury, and trying to dip into it in order to increase the government's coffers makes poor economic sense. To us, it is actually the time to do the reverse. The government needs to help the taxpayer. The taxpayer has suffered immensely because of the lockdown and also because of the slowdown that has been happening for quite some time. The government needs to support the taxpayer, and that needs to be done to ensure revival and recovery of the taxpayer. And if that happens, in the long run, it finally benefits the government. A growing economy, a strong economy, a buoyant economy only means that in the long run, it is the tax collections of the government of India which would go up. And therefore, to us, this is a time not to raise taxes, but to do the reverse, to support the taxpayer. Plus, look at it from a different perspective. We are in an era of competitive taxes worldwide. Each nation competes with the other in order to say that our tax rates are moderate or low and come and invest in our country. When you talk of individual tax rates, the peak tax rate of India today is perhaps the highest in the world among its competing peers from developing nations. India's peak tax rate stands at 42.7% along with surcharge. In the case of Sri Lanka, it is 24%. In the case of Brazil, it is 27.4%. In the case of Indonesia, it is 30%. And in the case of Thailand, Philippines, and Vietnam, it stands at 35%. India stands at 42.7%. While we have such a high peak tax rate for individuals, unlike us in other nations, not only are the tax rates for individuals moderate or considerably lower, they also do not force their nations to pay record fuel prices like has been happening in India at the moment. At present, we have been paying record prices for diesel and petrol, and in the process of doing that, the government is expected to earn tax collections to the tune of about 1.5 lakh crores. So apart from a peak tax rate, we even have other ways by which the government is collecting taxes from us. That is the auto fuel tax. And thus, from an angle of competing nations, from an angle of trying to say that we have moderate tax rates, so come and invest in India, even from that perspective, it is time to cut tax rates and certainly not increase them. So while we do expect and we would believe that the government would not increase the tax rates for individuals in the coming budget, and nor would it come up with past levies like wealth tax and estate duty, and while we think that it is very likely that there will be some kind of a COVID cess or a defense cess which is going to come from the government by way of a temporary tax collection measure, while we do believe that, we still have certain other expectations from the government as far as making life easier for the taxpayer is concerned, giving a fair deal to the taxpayer. And what do we expect? We would expect that the refunds get issued on an automatic basis. If the government has indulged in so much of digitization and data mining and artificial intelligence, it should be easy for the government that as soon as you file your tax refund and if the return is correct, you should get a refund automatically across the board. We think that it's time to do that and make the taxpayer feel that he is getting a fair deal. The second, of course, is we expect that law gets simplified. It has only been getting complicated year after year, and it makes a big nuisance as far as the taxpayer is concerned. Let the law be simplified. Let it be pruned if it can be. Let the forms that we file get simplified such that an ordinary taxpayer does not need a tax consultant, and let compliance in the process become easier. It's time to do that. Over a period of time, what we are seeing is that the so-called reforms which are meant to simplify matters and improve matters have been doing the reverse. That needs to be stopped. The third is, of course, some kind of an institutional mechanism needs to be put in place such that contentious additions are not made to the income of taxpayers and bogus demands raised on them. These cause immense hardship to any taxpayer, and few have the cash flows to be able to meet these kind of demands, which they most of the time win an appeal. It's time to somehow put an end to such kind of contentious additions that are made to the total incomes of taxpayers. And related to those contentious additions is, we again need an institutionalized mechanism such that interpretation of tax laws is not resorted to by the taxman in such a way that it is to the prejudice of the taxpayer. The taxman always likes to say that the law can be interpreted in favor of the assessee, but he fears the system. He thinks that the system will hold him liable for perhaps a very questionable interpretation of the law. They prefer to play it safe. That needs to stop. There has to be some standardized, correct, fair and just interpretation of the law. And if that is done, it will go a long way in improving the situation of the taxpayer as far as payment of taxes is concerned. The next relief that we would expect, or the next measure that we expect, is the government has undertaken faceless administration of the law in a big way. The primary purpose is to eliminate any human interface and thus do away with corruption and bribes. But then that does not work all the time. In certain situations, the taxpayer would need, in his assessment or in his appeal, a personal hearing be given to him. Even a virtual hearing does not serve any purpose, and we would expect that by virtue of the income tax department itself realizing that faceless appeals and assessments cannot be done in every case, there has to be some relief given such that a personal hearing is permitted in certain cases. This has been the year of the COVID crisis, and some kind of a COVID relief is needed. While the government thinks that it is going to be justified in levying a COVID cess, we think that the taxpayer is justified in seeking COVID relief. A COVID relief is very apparently needed. Look at the huge dip in sales and income of many taxpayers, and that justifies that some kind of a relief be given at a time when the government itself admits that this has been an unprecedented crisis. And what do we expect in that? At the moment, you get a set-off of losses on a forward basis. Your current year loss can be set off in future years. This time, we need what we would call a backward set-off of losses. If you have incurred a loss in the financial year 2021, let it be permitted to be set off in the previous years such that you are able to get the benefit of the previous taxes that were paid by you. Alternately, further, a deferment of tax payments should be permitted. There are a number of companies and individuals who may have had income, but because of COVID, their cash flows are depleted. They are in no position to pay taxes, and they need to be given some kind of a relief. Finally, we would certainly say that the government needs to institutionalize a situation where unwanted litigation which harasses taxpayers is eliminated. These, we think, are our expectations from the government in the forthcoming budget as far as individual non-corporate taxpayers are concerned. The larger picture to us is that the burden of tax has gone up in the past years, more because the law has become more complicated, compliance requirements have gone up, and resultantly disputes have gone up and refunds have got delayed. We think that this is where the shoe pinches the taxpayer. This is where the taxpayer thinks that he's not getting a fair deal, and this is where the government will need to come out with genuine reforms to make life easier for the taxpayer. In our opinion, if the government goes out of the way to make life easier for the taxpayer, tax compliance will go up. And if tax compliance will go up, the treasury which is empty today will no longer be so. And that's a long-term measure, a long-term strategy which we think the government must work towards. Let the coming budget be a starting point for these kind of initiatives. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Hello everyone. HW News English is 2 years old now. When we started this venture, we promised ourselves one thing, that news should remain free, because right to know is the right of every Indian. But to keep news free for everyone, we need support from some of you. And thus we have rolled out membership on our YouTube channel HW News English. But mind you, the membership is completely voluntary. The programs that we were doing earlier, that we are doing now, will continue to remain free.
First level is a basic level.
Here, you can be our supporter by paying Rs 199 per month. This membership gives you certain perks and benefits. The perks include unique badges in front of your name, a live show from Mr. Sujit Nair and from Mr. Akhilesh Bhargava per month for our members. You can also vote in some exclusive members-only polls. Now the second level is Super Supporter. Here you can be our Super Supporter by paying Rs 3,999 per month. This membership will include every perk that comes with basic level. Additionally, our Super Supporters can be a part of a WhatsApp group where we can have discussions and suggestions on various topics. The second perk includes a gift pack with our merchandise. And the third perk is a Google Meet with Mr. Sujit Nair, where you can join the meet and ask your questions to Mr. Nair face to face. Lastly, if you like, we would give a shout out to our super supporters in our programs. So, hope to see you soon with our badges.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, well, subscribe to our YouTube channel.